Good luck.
Okay. So, good afternoon, everyone. I'm Randa Rifai. I'm the founder and president of the Lebanese Association for Digital Transformation. Today, I will talk along with Tarek Saad about economics of Bitcoin. Tarek, the floor is yours. Tarek, are you here?
If you wish, you can continue, and once he joins,
Okay.
he will
Okay.
introduce himself again.
Yes.
Sure.
Basically, because Tarek is also a founding member of our association, and he's an economist and researcher, and he has been doing his research on economics of Bitcoin for the last maybe more than 1 year. And this topic is very rare to talk about, and it cannot be, let's say, discussed briefly, but we will try today to do it in a very short period of time so that you get the basics of this content. Can you,
Yes, I can hear
Tarek?
you.
Yes, Tarek, I already introduced you. Please, can you start with the presentation?
Yes, sure. All right. So oftentimes we get asked about the value of Bitcoin, right? One of the most ambiguous questions, and unfortunately, the answer is often abstract. As an economist, the answer to value should come from three places, which is the factors of production, the inputs that will contribute to the cost that will define the value of any item or any asset. In that sense, economists throughout 3 centuries of research have concluded that any type of value should be coming from three sources: land, labor, and capital. So with that said, let's get into the next slide, please. Yeah. So with that said, the founding father of economics of modern economics, Adam Smith, who was a philosopher and a natural observer as well, a moral philosopher. He used to observe economics in terms of natural process and natural law. And he is mostly known for his writings, The Wealth of Nation, where he spoke of the perfectly competitive markets. He was known to be the person who gave the most accurate description of these kind of markets. Now, in economics, there are four kind of markets, right? There's the monopolistic market where the producers have the upper hand and they decide the price. You have the oligopolies, which is a combination of two or more monopolies. And then you have the monopolistic competition where you have the product in the hands of a few producers, but they differentiate a little bit. And then finally, you have the perfectly competitive markets. Now, anybody who's taken an economics course would know that at school or at university, they actually tell you that the perfectly competitive market is a hypothetical extreme and that it could not exist. But Bitcoin changes that, and we're going to see how. So what are the properties of the perfectly competitive markets? Randa, you have access to this. Okay,
Yeah.
so there have been 6 identified properties that make up the perfectly competitive market. So there's a big number of producers and buyers. Is that true in the case of Bitcoins? Of course. The daily volume of trades is enough to tell us how much demand there is on Bitcoin. And also the increasing number of hashes on the network tells us that there's a lot of miners who are continually joining the network. Is there an easy entry and exit to the market for producers? And of course, by producers here, we mean the miners. So is there an easy entry? Of course, because anybody can plug in their machines and they can start mining. Is there any government intervention? There is no government intervention in the ecosystem itself. However, certain governments might put certain regulations, but that does not change the nature of Bitcoin. Perfect information, usually in stocks for companies like, the industrial companies, we do not have perfect information on the product, right? Because there's always this insider news. But in the Bitcoin ecosystem, it's an open source. The code is there. The only difference between somebody who knows so much about Bitcoin and someone who knows just a little is the time they have spent in trying to get this information and absorb it. So the fifth characteristic is the homogeneous product. Would you be able to differentiate two Bitcoins from each other? No. If I have a Bitcoin in my wallet and then somebody messes with my wallet and it changes it for another Bitcoin, it will still be the same. I wouldn't recognize it. So it is a homogeneous product. You cannot differentiate it. And that's, of course, majorly due to its intangible characteristics. Most importantly is that the producers or those who are entering the market in order to produce and to become miners are actually price takers. So no one in the market, the producers, no matter how big they are, they cannot enforce the price on the market, because if they try to increase the price so much, then people will buy from those who are willing to sell it for a lower price, and vice versa. If I try to sell for a very low price, there's only a limited amount that I can sell, and eventually the market will find equilibrium. We can keep going.
Yes.
All right. So, yeah, Randa, any questions?
Yeah, I wanted to stress on the point of government intervention, but you did already, because some people maybe got confused, or beginners, let's say, or people who are entering new in the ecosystem of mining Bitcoin, let's say. So they think that is it legal or not legal? Is it that the government will really ban miners and can have that big impact on mining? So you mentioned that
Yeah.
it happens,
It doesn't
but
change anything. Even if
not effectively on the mining ecosystem. Do you think that this would have some progress in the future, or an impact, or this will just be as it is? I mean, from the governmental side.
See, it is, well, in perfectly competitive markets, everybody acts out of self-interest, right? So if I'm living in a country and the country I'm living in decides to ban mining for some reason, then I'm going to go mine somewhere else. I'm going to move my equipment and start mining somewhere else. Because as we will see, as we progress in this presentation, we will see that a miner is kin to an employee, and an employee should never be unemployed. All right. So moving forward, Adam Smith also spoke in his book, The Wealth of Nations, which was written in 1775. He spoke about the specialized labor. When he spoke of the specialized labor, he actually was talking about efficiency, about advances in the skills, and the time, the time efficiency sort of module in which you'll be able to have more a time to produce something else. But the specialization at their times in 1775 was only understood in terms of human factor, right? But today in the Bitcoin ecosystem, that specialization is the ASICs, the application specific integrated circuits, right? They are called specific because they are machines made for a specific purpose. They are specialized labors. He also spoke of the self-interested producers, right? Because we know miners, they come into the game in order to reap some profits, right? No miner is willing to put up capital cost, which is the cost of the mining machines. They're not willing to pay for rent for the space, and certainly they're not going to pay electricity bills unless they have some self-interest, which is of course the profits that you make from contributing to the network through mining. The third very important point, it is actually at the core of Adam Smith's description of the perfectly competitive markets, which Bitcoin belongs to, as you have seen from the characteristics, is the fact that these kind of markets go through two cycles, the short run and the long run. We've seen that in Bitcoin, right? Not once, not twice, but 3 times already. After every halving in the ecosystem, what happens is that the input cost, right, of production is constant. However, the output, what they are getting, is halving. So that means in order to make it up, to go back to the break-even point, you have to do something. One of two. You either increase the prices, but if you increase the prices, then the customers will go, or the buyers will go to those selling at a lower price, or you actually cut down, and you also have the cost of electricity or the cost of your inputs. But to do that needs a lot of time, so you cannot stop. And this is exactly why, after every halving, what we witness is a slow realization among miners. Remember, not all miners have the same cost, right? Some are more efficient than the others. We will see gradual increase in prices, which tells us that the event that separates this short run and long run is actually instigated by the happening, and people are realizing that it is after this event that prices start to pick up. So people start to become willing to pay more for Bitcoin. The media starts to talk about it, and then we have what we call the non-price determinants of Bitcoin. And this is the reason we move from what is known as natural price, which is the cost of production of Bitcoin, into something called the market price, the inflated price of Bitcoin. Now, this is something that people do not like to hear often, right? Because oh no, it's not inflated. This is the real price of Bitcoin. No, as a matter of fact, if we do a cost-based pricing for Bitcoin, we will get to know that in a day, in this cycle, there are 900 Bitcoins produced. However, the cost of operating the network, I'm not saying the cost of mining, I'm saying the cost of operating the network is equal to 1 to the price of 1 Bitcoin. That means there's 899 Bitcoins created for free and every day. And this is why Satoshi Nakamoto called Bitcoin a subsidy. All right. And so if we look at this cost-based pricing and prediction module, yeah, I'm still working on this module and it's fascinating. What I have here is the dates. For example, we have 1 week of data from the 31st of May up until the 6th of June. So the closing price is, corresponding to the dates shown, and on each day, what was the hash rate on that specific day, using certain math and having 4 different cost of operating the network, which is the 5 different cost of electricity. We can see that, of course, each color corresponds to a certain cost. We see that currently the ones who are operating the network at an efficient cost are those operating at the cost of 2.5 cents per kilowatt hour. So if you look at those operating at 5 cents, their cost of production for the 31st of May was 69,200. However, the price of Bitcoin in the market was 37,000, which is, of course, cost is higher than the price, so they would be bankrupt. So the second set of data is 3.75 cents. Same thing, the cost is 51,900. However, the price is 37. It is only when we get to the area where, or to the simulation where the cost of mining or the cost of electricity is 2.5 cents per kilowatt hour, that we see those miners being profitable, i.e. those employees in the Bitcoin ecosystem who are operating on or consuming electricity at the cost of 2.5 cents per kilowatt hour, they are the ones who are operating the network at the efficiently or with profit. After them are those who are operating at 1.125, and these are the biggest players, and these are the most profitable, and they have the optimum output and the optimum profits, and they will be the ones running the network on the long run, when the cost is equal to the revenue, and therefore there's zero profits until the next halving cycle occurs. And as you can see, by the way, did we get to 41,000 yesterday, Randa, on the price of Bitcoin?
I think almost.
Yeah, 41,000, and that presentation was done 4 or 5 days ago, right?
Yeah.
Yeah. So yeah, it's actually an indicator of what would be the range of prices at any given period of time.
Yeah, this is what I want to add and ask you, Tarek. I know that this is your passion for economics. So when you start, خلاص, you go on without stopping. I can't stop you. So just to digest a little bit of what you said, of course, we will take questions, but we don't have much time. I just want to ask you myself that what do you think about for those people who already invested in Bitcoin, for example, and they want to understand it from a different perspective and not only following the technical analysis or the trends, let's say. So what do you advise them today, or not advise, let's say,
Okay.
what do you advise or recommend to for them to follow or to expect, and
Okay,
not
sure.
a financial advice, I mean, but a recommendation, let's say, so that they are aware of things that they missed out of.
Okay, I think I got your question. First of all, this kind of reports I do, for big institutions, for banks, for investors who want to actually understand how the module works. Of course, I wouldn't expect the average investor or the average person who wants to look into Bitcoin to get into so much details. My advice for people usually is, number one, do your own research, understand where the value is coming from. Do not get affected by the hype that people create, because most of the times things are over exaggerated and people become super bullish. Bitcoin is still in the crawling stage. It's still not matured. We are getting there. We are not yet a store of value. We are becoming a store of value, but we are not yet there. There's volatility, so people should expect that there's volatility. Do not invest more than you can actually live or survive for the cycle of 4 years. And you know what, every cycle is going to be like the previous ones in terms of the short run and the long run. So there will be the halvening, there will be the sudden increase in price, there will be the retracement. It's always going to be there, but by how much the percentage of change in prices, that's going to decrease over time until we reach the asymptote. So no extreme high hopes to, and I would always tell people to do their own research. No one is smarter than anyone. It's all a matter of how much time you invest.
Yeah, Tariq, and you have invested a lot of time for this, we know. And I didn't have the chance to introduce the association for those who are watching today. So Tariq and I are two of four founding members for the association. We work into, we realized that Lebanon is a service-oriented economy, and it has been like this for years. And now you know that we are passing through crisis, and we thought that we have talented people here. We have creative initiatives in the digital transformation as a whole. So we thought that we should unite these people and connect them with the outside world, let's say, or to create network and collaborations. And we do researches and consultancies for different aspects of the cryptocurrency and the blockchain technology. So basically, let's get questions. Let's see the questions. I think there's one in the chat.
I need to apologize, Randa, because I'm using Zoom, so I'm.
Yeah, it's okay. So if anyone has questions for Tariq or me, please go ahead. Maybe we have
I think
3 or 4 minutes. So.
there was one posted question. I think it says, how crypto economy make any country's economy better? Okay, Ahmad Manzoor. Ahmad, the issue here is not about making an economy better. It's about understanding the country needs, right? For example, in Lebanon, we have a need to actually preserve, our data in such a way that it is visible to the public. We know we can track it, but also at the same time, it does not hinder the privacy of the private sector, sorry, of the public sector. So this is a main issue for us, especially with a lot of corruption. And for example, the issue of the port explosion, the maritime port. I don't think there is a single document that can relate to anything. They're all gone. if we would have implemented blockchain technologies into the maritime port, we would not have had to lose all the data, all the information, which will reflect negatively on our balance sheets in the future. So it's about understanding the problem in order to find a solution.
Thank you.
Thank you
Bye.
so much. Appreciate all your attendance. All the best. Thank you.
Bye.